All right. Today is the 4th of May, Monday. We are starting out this week with no news today on Monday. And I was thinking that we can maybe try a backtesting session where there is nothing in the market. Maybe do a short backtesting session in the replay mode if there is nothing in the market. So you can go through the strategy in a short backtesting session and still have the chart on the other side so I don't miss it. Mm, Yeah, we can do that. Let's see what we are expecting. I'm expecting the market to close in about 8 minutes. If it closes beneath this candle right here, it gives me an indication that the market it might be mm, neutral, I would say, because we have a strong break of structure to the upside on the 4 hour, but we just swept liquidity on the daily right here. So this might reverse to the downside and hopefully give us a school run, typical school run. I mark out the overnight range right here. I'm gonna keep it like this. Now on the Nasdaq, what are we looking at? Yeah, that's not very clean. If we go to the 4 hour, we have a breakout structure on the 4 hour right there. Doesn't look very clean to the upside. The market has not been looking good lately. Got the overnight range. Let's see what happens. So it doesn't look clean on Nasdaq today, but on the DAX it looks better. So we might see what the DAX has for us. This is the low. Right, the market's about to open in about 5 minutes. Let's see. All right, market just opened. All right. So we have a break of structure going to the downside right here. And we're seeing what the market is doing right now. We're waiting. I'm waiting for it to we have a fair value gap here on the 15 minute. We have a 1 hour right there that I don't want to miss like I did last week. A fair value gap right there on the 1 hour. And we have a high right there. I'm marking out the potential take profit areas so I don't by accident miss them and see the market reversing from there. Let's see here. I'm checking Nasdaq, the movements, if they are the same. We have a lot of liquidity resting right there, right there, that the market might want to take out. So we are about to close the 5 minute candle in about 20 seconds. It just passed through the overnight range. Now we haven't closed the 15 minute candle yet, so we're just waiting for the 5 minute candle to see how it reacts. If it's a low or a positive or a negative candle. A negative candle to the downside. This might continue to the upside. Let's see here. Still being patient with it. I might try a long right here. The trend is not really defined, but we can still see that there's a high created here to the upside. So I'm not going in with that much risk, but I'm entering along right here. Currently inside a long position right now on the Nasdaq. Now counting the where I can take my profits. So I'm taking the first profit here at the fair value gap 50% mark and marking out the setting an alarm right here. Alarm alert. So why did I take this trade? Bullish trend, liquidity swept on the 50-minute right here, right? And I have a breakout structure, fair value gap reaction right there, breakout structure close right there, and enter off of it right here. Now, I'm a bit skeptical because it's way too close to market open, but still the setup was not that high of a risk, and we can just spike to the upside right here. So I'm waiting for it to do its thing. Now I'm going to mark out my take profit on my broker to have it fixed so I don't need to close it manually. Sometimes I need to do it manually because it gets a bit stressful, right? So I'm 27,811. Bring the chart up right here. Looking at the DAX, it's giving us a reaction on the fair value gap right here. And I'm looking at the Nasdaq, seeing the reaction that it gives us. We're continuing to the upside. It looks good. Right, we are about to take profits. When my first take profit gets hit, I'm moving my stop loss to break even. We're about to hit take profit. We haven't done it yet. Now, on my broker, it went through it. Um, but it didn't take the it in my broker, it went through it, but it didn't take profit. I'm gonna tell you when it hits take profit. Now it's still it's wobbling on the line, the price action. That's because of spread, commission, and fees, and um, still waiting for it. It almost has to pass. Still didn't take. Now it took. Oh, my ears are ringing. All right, first take profit hit, and I put my second take profit on this area right here. So now we are moving our stop loss to break even. When we move our stop loss to break even, just let me draw out a line right here. Let me just do it on the broker first. All right. I have a template preset stop loss SL stop loss to break even BE. So we don't put our stop loss directly on the line where I don't put the stop loss directly on the line where I entered. Why? Because of spread, commission, and fees. Because when you put your stop loss and when we put our stop loss directly on the entry position right here, you will still be in a loss. Like I don't know, depending on the capital, but like a $80 loss or $120 loss. That's happened for me before. Why? Because when we put it exactly on the entry point, there are still spread and commissions and fees that's been taken as long as you open the position on your broker. So the way we do it to not be in a small loss is that we put our stop loss a little bit over, like a couple of pips or points over the stop loss area, so we don't get taken out by spread, commission, and fees, right? So now I'm waiting for the other take profit to be swept. The reason I put my stop loss, my first fair value gap right here, is because of this fair value gap on this area right here. There is also a breaker, what I call it, so it can reverse from this area right here. But this was a good trade. Now, this is probably gonna create new all-time highs because there is no liquidities resting on the left side. This is the all-time high on Nasdaq. Now, I have a friend, he left the trade running for 3 weeks. He took a trade and he left it running for 3 weeks. Um, can you do that? That's a hard thing to do, huh? All right. There's a high right here also. That's on the 1 hour. Yeah. Right now, we just leave it. I'm focusing on the DAX right now. What is the DAX looking like? So the 15-minute candle closed inside the range. This is what can happen. So there's a liquidity resting right here, and we also swept the daily liquidity resting right here on this area. Maybe too dark. There you go. The liquidity, the daily liquidity resting on this area, because if you go to the excuse me, if you go to the daily chart, you can see that there is liquidity resting right here. Now, daily liquidities, higher time frames hold higher power. So because it swept daily liquidity right here, it didn't sweep this liquidity area right here. And then if you go to the 1 hour, swept liquidity. If you look at the 1 minute model, but in a larger time frames, we have 1 minute model. We are waiting for liquidity sweeps on the 15 minute or on the 1 hour, and then we go down to the 1 minute looking for a break of structure and a fair value gap. The same thing goes. This model can be traded on higher time frames. You just move it over to higher time frames. So instead of 15-minute liquidity sweeps or 1 hour liquidity sweeps, maybe you look for a daily liquidity sweep or on the 4 hour liquidity sweep, and then you take the trade on the 15-minute. That is, by the way, what we are trying. I mentioned this inside of the live Q&A yesterday. That is what I'm trying to build together with one of the fellow community members. He's a developer. He's developing a system for us to try out. I'm wanting to try this out so we can not be sitting next to a chart like this, because we have AI and we have tools and we have strategies that we can implement inside of the our trading view or through a messenger, so it can give us a message when to enter, but on the higher time frames. Doing this on the 1 minute, it's way too stressful. So um, let me go back to this so I don't digress. It sweeps liquidity here on the 1 minute on a daily. Then you drop back to the 1 hour, and you see that there is a 1 hour liquidity, a 1 hour break of structure that is happening, and there's also a 15-minute. This is where it gets interesting. There's a 15-minute fair value gap. It's like 1 hour, and there's also 15-minute. So 15-minute equals to the 1 minute model. What happens in the 1 minute happens on the 15-minute. So see that the 15-minute break of structure happens right here, and then there's a 15-minute fair value gap reaction happening right here. And this is usually where people enter shorts. Gives them a reaction to the downside, and then just leave the trade and take a 1-to-1 or 1-to-2. So how is the Nasdaq looking? Is that okay if our first take profit less than risk? That's fine. That's fine. Because are you willing more to are you I'm seeing this like this. There's a high probability of it taking out our or reversing from this area, right? And then taking out our uh, our TP. That is fine. It's a balance between the two. So are you more willing to take a small win than have it taken out your stop loss, or taking you out on the risk that you have risked? It's a balance between the two. It's not something static I can say yes or no to. This was my entry right there. Now this can be maximize maximize the take profit system. So I don't want to go overboard with this, but I'm gonna just show you an example. So I'm moving my take profit right here. There's a high probability of it continuing to the upside because there's high time frame liquidity, high liquidity on the 1 hour. So what we can do right now, we can just wait for it until it breaks structure to the downside on the 1 minute. When it passes this area right here where we initially put our first take profit, which is this area, when it passes through it, the thing we are looking for is to maximize our profit. Now, the maximization of this particular trade is because we're risking 0.5%. Is it worth it even? But we can give it a try. That's no harm to just give it a try, because doing this where we have the take profit system, where we are basically we're just waiting for the market to break structure to the downside, and this is where we take our full profit, where we close the entire position. Doing this on the 2% risk or a 1% risk is more worth it, but now we are risking 0.5%. I'm putting an alert on these. Breaking structure to the downside right here, but I'm not taking any profit. I'm leaving it. There's a 5-minute fair value gap right here that it can reverse from. We also have a 5-minute fair value gap right there that it can reverse from. I'm passing these two areas and stopping me out. That's, yeah, that can be unfortunate. So we have the 5-minute candle that's going to be closed in about 30 seconds. What do we think if we move our stop loss to 27, 9, 23? 27, 9, 23? Where is that? 823, I assume you mean. You know, these moves right here, when we backtest, we have data. Before, the thing I did is because I realized that when I take the trades, uh, some of the trades are inside the stop loss area for about 20 minutes. So I usually mark out now when did I take my profit at 9:05. So in 20 minutes, 9:025. So during these 20 minutes, the price action usually just sits in the stop loss area and then it spikes either up or down. Then I had some data regarding this that as long as the trade was inside for about 10 minutes or more, it's going to hit my profit eventually. So I'm not saying that this is not gonna hit my stop loss or hit my profit, but to have some data around these things during your backtesting period, basically when, um, so we don't prematurely exit the trade or prematurely do something with our hands to move our stop loss or move our take profit or do all of these things that will affect our trades. Um, I'm just gonna clean this up. It seems so messy. So I'm jumping to the 5 minute and the 15 minute just because I like to see the higher time frames for value gaps. I like to see the higher time frames movement because it's a bit much noise on the 1 minute until it moves really. So I'm giving it some time or wiggle room to do its thing. You can see the DAX is moving to the bullish side. Did we miss a trade on the DAX? No. Still uncertain. It's going back and forth. Bullish, bearish. All right, we're about to hit our second take profit, but I moved this take profit, and we're gonna have a take profit system right here where the market or the price closes on a breakout structure on the 1 minute before taking profit. So we can maximize the trade. The reason for this, if you look at the DAX, the market's just continuing to the upside. This, we are at the all-time highs right now. So the market might continue and create new all-time highs. Um, Thinking about it this way, like we could have had a position right here, right? Let's say we took a position right here and we have taken our stop, our TP on this area, and this is what the market did. It created new all-time highs, so we don't want to miss out on these moves. Now it's still fine to take the second take profit right here on the highs, right? there or on the 1-hour liquidity. Um, so we are waiting. I'm waiting still. Thank you. Have a good day, Beryl. All right, is not looking very promising because this might close a breakup structure right here on the 5-minute. These moves, these here, the 1 pip closest to take profit. These are the annoying ones. So on the DAX, if this reverses, because this is the liquidity sweep and liquidity sweep breakup structure, if this enters a fair value gap right here, I'm going to take a position. Let me prepare it on the broker. In this scenario, did a liquidity sweep, we are still bearish, and it's still swept liquidity right here. Let's say it swept liquidity on this is the buy side liquidity on the higher time frame, on the 15-minute. And then it broke structure right there on the low. Right here, it also broke structure. And now on this low right here, we have 1, 2, 3 fair value gaps. And this is probably going to take me out soon. Haven't hit the break even yet. Right, the 1 hour candle is about to close in 2 minutes or 1 minute and 5 seconds. in the alert down here because it looks like the DAX is continuing to the downside and the Nasdaq is following with it. So we might get taken out pretty soon. And now, all right, I just got, there you go. Position got stopped at take profit, at stop loss, at break even. And the first position, take profit, got hit. So what are we looking at right now? There's nothing more on the DAX because unfortunately it doesn't look like we're gonna do a reverse to the upside, take out liquidity, fair value gap, and then reverse to the downside. So it was a big move to the downside. Look at this. All right, let's short walkthrough. Why did I take this trade? So we had not that clear of a breakout structure to the upside, but we have a breakout structure to the upside on the 4-hour, and then on the 1-hour, if we count this as a breakout structure, yeah, sure. If we count this as a breakout structure, yeah, this is a high. There's a high created on the red candle, breaking the structure right here. Continuing to the upside. Now we have a 15-minute fair liquidity that was resting on these areas. There is 15-minute liquidity right here, right here, right here, on these lows right here. And then we marked out the overnight range and we saw that the market is not going to give us a school run. So I would jump down to the 1-minute time frame, saw the 15-minute get swept. I took this trade right here because what did it do? It reacted to the fair value gap right here, and it reacted to the breakout structure, which is created right there. And this is where I entered the trade, put my stop loss underneath this area right here, and took my first take profit at the fair value gap level on the 50-minute 50% mark of the fair value gap right there. And then I took my other take profit right here, which was supposed to be where we should apply the take profit system because I believe that it's going to create new all-time highs. Maybe not now, but maybe later on the day, New York session perhaps. But it didn't touch. It was one pip away from. I wish I wish I can say it touched the take profit and we took profit, but it didn't. And then when it took out our first take profit, I moved the stop loss to break even, and it stopped us out after 36 minutes. Now, on the DAX, we couldn't find any entry, unfortunately, today. And that is how it goes sometimes. Now, do I take this trade? You can see that it swept liquidity. Broke structure, broke structure, broke structure, continuing to break structure to the downside. It has a fair value gap created right here. Now, do I take this trade right here? I can, but is it a good trade? No, because this is the equilibrium 50% mark. What is the market most likely going to do? It can reverse to the upside at the entry level. So we either take the trade right here, right, or right here. So we get this move. We are inside this entire move. This entire move. We don't take the move in the middle and hoping for a one-to-one. All right, that's about it. Trading on the New York session today. If you want to join, feel free to join. That's about it for this London session, trading session. All right, talk to you later, guys. And if you have any questions, let me know. Take care.